The COVID-19 pandemic's created more wealth in the space of 2 years than anything the world has ever seen. The combined wealth of the 10 richest men in the world doubled from $700 billion to $1.5 trillion at a rate of $15,000 per second, according to Oxfam. So many people make so much money during the pandemic that they decided to retire early. And I don't mean just billionaires. Because between January 2020 and October 2021, the number of retirees in the United States jumped by 3.3 million, an increase of 7%. The Federal Reserve calls it the Great Retirement. And the source of this incredible wealth creation? The two best performing assets during this period were tech stocks and real estate, with NASDAQ 100 nearly doubling and house prices going up at their fastest pace in years. And what goes up must come down. So far this year, tech stocks are already down 25%. Are house prices going down the same path? Is there a worldwide real estate bubble? And if so, which country has the most inflated bubble and which promises the best investment opportunity? Hi, I'm David Wu, a former Wall Street macro strategist with a 20-year track record of making actionable predictions about big global changes. Welcome to part one of The Money Game, where I take on groupthink, propaganda, and conspiracy theories in my critical analysis of markets, economics, and politics. Before we begin, I invite you to subscribe to my free YouTube channel, where you will be notified when a new video comes out. For part two of this video, where I discuss my investment strategy, come visit davidwu.unbound.com. Between January 2020 and December 2021, the rate of appreciation of home prices far outstripped income growth for most of the developed countries. This is especially true among Anglo-Saxon countries, but not exclusively. In New Zealand and Canada, home prices shot up 40%. In Australia, 33%. In the US, 25%, and 15% in the UK. In South Korea, home prices climbed by 25%, whereas in Germany, they went up 22%. Israel, too, saw home prices going up 15%. This pace of appreciation of home prices is unprecedented in countries like Canada and Germany. In the US, the last time we saw such rapid increase in home prices was in 2005, just before the real estate boom turned sour. The received wisdom about real estate is that it is a good hedge against inflation. This proved to be true over the past 2 years. Real home prices in the US and the UK went up so much during the pandemic that they have surpassed the levels we saw before the collapse of the real estate market during the Great Recession in 2008. Assuming you don't live in Japan or Italy, should you be concerned that your home may be overvalued? Let's look at two popular indicators that we use to measure over or undervaluation of home prices. One, price to income ratio, and two, price to rent ratio. For the price to income ratio, the higher the average home price relative to the average income per person, the more home prices are overvalued. For the price to rent ratio, the higher the price of owning homes relative to renting, the more home prices are overvalued. So what are these indicators telling us about the real estate market in the major developed countries right now? In the case of the United States and the UK, the price to income ratio is now back to levels prior to the real estate collapse 15 years ago. In Australia, the price to income ratio has risen above the previous peak in 2017. Canada and New Zealand now have the highest price to income ratio among the developed economies, with Germany and the US not far behind. What about the price to rent ratio? In the US and the UK, the price to rent ratio has also exceeded the levels prior to the real estate bust in the late 2000s. However, it is in countries like Canada, New Zealand, and Germany where the prices of homes relative to the cost of renting has become extreme. When people are willing to pay a lot of money to buy rather than rent, it is often because they expect rapid home price appreciation to continue. This is the very definition of a bubble. Which countries have the most inflated bubbles right now? To answer this question, I calculate the percentiles of the 11 countries in my sample according to their price to income ratio and their price to rent ratio, both relative to each other as well as relative to their own history, and taking an average of the percentiles. My findings are not too surprising. Home prices are most overvalued in New Zealand. However, Canada, Germany, and the US are not too far behind. Australia is currently in 5th place. In contrast, countries like Italy, Japan, and Korea don't have a housing bubble. What was it about the pandemic that so many countries saw such huge gains in home prices? Record low interest rates were definitely a major factor. Whether it was the 30-year mortgage rate in the US, the 5-year mortgage rate in the UK, or the 3-year mortgage rate in Australia, or average mortgage rates in Israel, borrowing costs for buying homes fell to their all-time low during the pandemic. By making buying homes more affordable, this drove up demand and prices. Low borrowing costs is an important reason, but not the only one, for the home price appreciation. Another important reason is the change in lifestyle. The pandemic, by forcing people to stay home and to work from home, likely also caused people to allocate a higher share of their income towards their changing housing requirements. Whether the pandemic is over or not, both of these factors are beginning to reverse course. The first more quickly than the second. We all know interest rates are going up. This has been felt especially acutely in countries where long-term fixed-rate mortgages are popular. In the US, 30-year fixed-rate mortgage rate has jumped to 5.3%, the highest level in 13 years. As a result, affordability has declined to the lowest level since 2009. What about remote work from home? A recent survey by Conference Board finds that only 4% of US companies said that they're requiring all employees to return to their workplace full-time, and less than half said that they were requiring some workers to return to the office 5 days a week. The slow pace of a full return to the office reflects the fact that workers generally prefer working from home and having the upper hand in the current tight labor market. However, this is likely to change when the economy slows and the employers regain their leverage. Many studies have concluded that remote work comes at the expense of productivity. For example, a study by Microsoft found that firm-wide remote work caused the collaboration network of workers to become more static and siloed with fewer bridges between disparate parts. What this means is that much of the home price appreciation during the pandemic has been driven by transitory factors. In other words, the gains in real home prices does not seem to be sustainable. It is reasonable to assume that home price will track inflation and wage growth over time. If inflation remains at its historically elevated level, then home price might continue to rise quickly in nominal terms. But that's a big if. Central banks are seemingly determined to not allow higher inflation to become entrenched like in the 1970s. For the time being at least, I think we should give them the benefit of doubt. Not surprisingly, the central banks of the two countries with the most red-hot real estate markets have been the most aggressive. The Reserve Bank of New Zealand increased rates by 50 basis points in April, the 4th hike in a row. The Bank of Canada also hiked interest rates by 50 basis points last month. In the US, the Fed hiked 50 basis points last week, and the spike in long-term mortgage rates already dampening home sales. As I've argued in previous videos, I think the interest rate increases to counter the excess of the pandemic era will likely push the US economy into a recession before Thanksgiving. If I'm right, the housing market could be the next shoe to drop. Even though I do not expect anything like we saw in 2007-2009, given the relatively lean housing inventory right now. Which real estate market offers the best potential for price appreciation? There are 3 drivers of long-term appreciation of home prices. 1, population growth. 2, per capita income growth. And 3, possibility for remote work. Well, ranking countries by these 3 drivers, Israel finishes on top. Its population is expected to increase by 10% over the next 5 years. Its per capita income is increasing at a rate above that of the OECD average. Finally, 8% of the Israelis work in high tech, the highest percentage in the world. It's been shown that hybrid work arrangements work better in tech than in most other industries. So what is my bottom line? The rapid pace of home price appreciation of the past 2 years is not sustainable. Countries like New Zealand, Canada, US, Germany, Australia are experiencing a housing bubble. Over the next 12 to 24 months, interest rate hikes, the approach of the next recession, and the gradual return to the office will place downward pressure on home prices. Longer term though, countries with a high fertility rate like Israel or a liberal immigration policy like Canada will see faster appreciation of their real estate market than others. If you got something out of this program, please hit like and subscribe to my free YouTube channel. If you want to watch the second part of this program in which I discuss my investment strategy based on this theme and other macro themes, please come visit us at davidwunbound.com. Thank you for listening.